I welcome you back to the Strategic Trading Academy. So, guys, before we move on to impulse correction, let's just recap on the things we touched on. So, we touched on a bullish trend, we touched on a bearish trend, a consolidation trend, a support and resistance trend, and an impulse and correction trend. To no, we haven't touched, but we're gonna touch on it now. But so let's just leave it open for now. So an impulse correction is basically means that when the market impulses, it simply states that the market is moving with force to whatever direction. Let's say an upside. Let's make a bullish trend, for example. In a bullish trend, you would see a market make significant pushes to the upside. The market will pull back down, and the market will push back up, pull back down, and push back up. So when the market does this, guys, this is called impulse and correction. So where do we see the impulse? The impulse is by force. Like I said, the market moves with force. So this is an impulse move. This move right here. What did I do again? Okay, there we. Let me just. Uh, let's do that again. So an impulse move is basically when the market moves with force, when it moves to the upside with force in a bullish trend. So this right here would be considered our impulse move when the market moves with force. Then what the market tends to do is the market, after it covered a significant distance in a short period of time, then the market will breathe. The market will breathe, creating a retracement, a pullback, or a correction. This is a correction when the market pulls back. So, guys, a correction basically happens when the market needs to recoup or regenerate the liquidity needed for it to continue going to the up direction. So what this move tends to do is it tends to put or strike fear in traders. The reason I say that is because you could have answered, maybe you would have thought, okay, guys, the market is about to impulse right now, so you take your buying opportunities, right? So you take your trades, you take your buys. But okay, let's say the market has been moving from Wednesday, like it's been moving, guys, in this impulsive move, and you've been holding this trade. Then suddenly the market starts retracing. So what this retracement starts to do is that it makes, or yeah, it makes traders believe that, oh no, the market is changing direction, whereby it is not changing direction. The market is only recouping energy so that it can continue making more impulses to the upside. So in a downtrend, this is how it will look like. This is how it will look like. The market will make impulse moves to the downside. Market will correct. When the market corrects, it will create a trend, a semi-trend going up before going down again. Will create another trend going the opposite direction, then it will continue going down. So these as impulse and correction, guys. This is simply impulse and correction. So this is how it will look like going to the downside. This is how it will look like going to the downside. So we would have our impulse moves, or have our impulse moves, impulse correction. So impulse correction, impulse correction. So what we would tend to do, guys, is to enter just after the break of structure at the impulse to eat the impulse move, allow the market to play, then we can scale up our positions going to the downside. But I will show you this on the advanced trading course. So for now, that's basically impulse and correction moves. So now let's look for some in the real market. Let's look for some in the real market quickly. Okay, let's just dive into the 4 hour time frame. So a 4 hour time frame shows, so a candlestick closes every 4 hours in a day. So this is how the candlesticks would look like. So from yesterday, what was the date yesterday? The 5th. Okay. So like for example, guys, for example, like, yeah, in a day, there's, for every 4 hours within a day, there will be a candlestick that appears now. I'll show you this later. Just don't want the time to overlap, because I need to keep it within a specific time frame. So anyways, let's just cover impulse and correction, then I'll cover that at a separate course, guys. So impulse, we have an impulse move to the upside, as you can see here. Then we had a correction, an impulse move, correction, impulse move, and then the market started correcting, then an impulse move. Now the market is correcting within this channel. So let's just put in our trends for clarity. Let's just put in our trends. So let me dive in so that we can see these impulses properly. So we're in the 1 hour time frame now. We're in the 1 hour time frame. So this is how impulse correction moves will look like. So we would have our impulses. We will have our impulse moves to the upside, right? Downside, correction, and an impulse move. So that's an upward. That's how an impulse would look like in an up market. So in a down market, this is how an impulse correction will look like. So we have our impulse, we have our correction, we have our impulse, we have our correction, we have our impulse, correction, and impulse. So like I said, guys, when we are selling, we wanna be taking our trades where the market impulses. For example, the market is impulsing down, so we want to eat those impulses, right? Eat those impulses, close at the support, close at the support here, then continuing to take our impulse trades to the downside, then we had a small impulse here and a correction. So this is how you would trade impulse correction, guys. You wanna only eat impulse moves to the downside to avoid being stopped out or manipulated, and it also goes hand in hand with our trend. You see, we sell at the resistance and buy at the support, but I will cover how we place everything together, guys, once we break down the market even further in our later practices. But for now, this is it. We sell at the resistance. You would have sold here at the resistance, and here's the resistance, the support. We had the support here, but the market broke, turning it into a new resistance, and the market continued to sell. One more time, we have impulse moves to the upside, the market corrects, then there's impulse moves to the upside, the market corrects, impulse moves to the upside. So the market is always doing the same thing. Even if you can go on the 5-minute chart, 15-minute chart, even if you can go into the 15-minute chart, the market moves in impulse corrections on every chart, guys, on every chart. So let me just erase this. Okay, let's dive deep into the market, guys. Let's dive deep. So like I said, we had a correction over here. We had a correction. With the assistance of support and resistance. Then the market created impulses, right? We had impulses to the upside, like I illustrated with my brush stroke, with the black brush stroke. So we had impulses on to the upside, then the market corrected, then we had impulses, correction here. So if market respects what is the market doing? So the market created pushes to the downside, impulse, correction, impulse, but it's consolidating within this, respecting the support channel over here, right? Then we finally had impulses breaking this correction right here. We had impulses. Now the market is creating impulse correction moves. We can expect impulse correction to the upside, or the market can break within the resistance again, breaking down, creating impulse correction, impulse correction, and impulse correction. So that's basically the market breakdown for impulse and correction, guys. I will see you in the next video, where we will be covering advanced trading, guys. We're gonna be covering advanced trading. So I'll see you guys then. For now, peace out, and also watch out for my weekly market breakdown, which I'm gonna be recording shortly after this video. So peace.